Stock market is falling down. Hey, is this the stock market 2022 crash? Hey Abhishek, many of my stocks, my best stocks, even my best stocks for my portfolio are down by 50 to 70%. Should I be averaging them down? Should I sell everything? Or should I start buying some growth stocks because many of the growth stocks are at a very cheap valuation? Will the stock market fall down further? Will it rebound? If yes, then when? And from what support level? Will I be able to answer all these questions? Probably not. Nobody can. But what we can do instead is analyze the market. So, let's get started. Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. So, is this the stock market 2022 crash? Nobody knows, guys, and nobody can tell you that. But like I said, what we can do instead is analyze the market and make a strategy. So, first thing first, this week is gonna be Fed meeting once again. And I do think, in my opinion, what is gonna happen in that meeting is that Fed's monetary policy, so Fed will be going to lay down their foundation for their monetary policy. So in my opinion, what's gonna happen is that there will be a shift in their monetary policy and they will be focusing more, the policy's priority will be more towards fighting inflation rather than supporting growth. If it's not, then that would be an alarming situation. But if it is like that, if this would be the discussion, then of course the market will be in a negative sentiment. But trust me guys, sooner the better. The sooner Fed finds the way to fight inflation, which is rising the interest rates, the only way, the better it is. Yes, in short term, it will affect the stock market in a negative way. But on the other hand, if this happens, which is less of a chance and in my opinion could be really dangerous, is that if Fed says that everything is okay, the economy is recovering at a much faster rate, at least what we expected in 2020, and therefore we won't be increasing the rates at a much faster pace or as high as expected or assumed, that could be an alarming situation because that would be increasing our time of uncertainty in the stock market. Eventually, they have to taper down this process, right? They have to put a leash on the buying back programs. And what will this create is this bubble of uncertainty for the investors in the stock market. Because if they keep printing money, but they won't be able to pass on all these stimulus programs, then this money will be floating around only for the big fishes in the market. The stock market will get affected. For example, if the inflation keeps rising, people will not have enough money to spend, and there won't be any velocity of money, which I have discussed in my previous video. What it means is that not enough money floating around, the movement of money is not that smooth, and that means people don't have enough money to put into the stock market. That affects the liquidity in the market, and that is because of the velocity of money is not good. That is one case because of inflation. And on the other hand, if inflation is fought better, but the interest rates has to rise, then that again affects the stock market, because then people will move on to a more secure investment, a risk-free guaranteed investment, bonds. So in short term, both of these ways will affect the stock market in a negative way. Now, moving on to another point, what actually is happening since last 2-3 days or since last week, when everybody knew, everything was known that okay, the Fed will increase the interest rates, and like I mentioned last year already, that Fed will increase their interest rates at a much faster rate than expected, and this was already mentioned in January. Then what actually happened in last 2-3 days or last week? So what happened is Netflix. This is just my opinion, and this is what I think is happening with the market. The market is now in a negative sentiment. So the market sentiment is moving towards more defensive approach. We saw that Netflix reported their quarterly earnings, which was not that impressive according to the analyst. The subscriber growth count declined, and also the outlook is not that impressive as per the analyst projection. And that's why I think that the upcoming months for the stock market 2022 could be really volatile. Netflix is an example. This is giving us a lot of signals to understand the market sentiment, to understand how the market is reacting. Netflix, being the biggest, one of the biggest giants in S&P 500, fell down by 22% intraday. Is it normal? I don't think so. Why? Disappointing outlook, disappointing numbers. Were those numbers really disappointing? I don't think so again. But because of exceptional numbers in 2020 and 2021, the analyst assumptions, projections increased. And now they didn't meet the analyst projections. This is what I'm trying to explain. The velocity of money and the market sentiment are interrelated. The velocity of money is decreasing because with the rise of interest rates, people won't be able to borrow money as easily as they could in 2020 and 2021. Plus, because of all these stimulus checks, extra money floating in the economy, people had enough money to spend into the stock market. But now, first of all, the interest rates will rise, the tapering process will happen, less money floating into the economy, to fight the inflation. People won't have enough money to spend on Netflix subscriptions, buying expensive iPhones, Amazon Prime. That's why the same principle could be applied to all other tech giants or companies like Apple, Amazon. And therefore, their future earnings might get affected in a negative way. And therefore, I do think that the future outlook for these companies might seem disappointing, even though they are, in reality, they won't be. But since people expect a lot because of the previous years, they do think that the projections or outlook are weak. And therefore, if any company misses on analyst projections or earnings, they will have an amplified effect, same as Netflix had. So I do think in the current market sentiment, the business won't be rewarded as they should be if they surpass the analyst projections. But on the other hand, they will definitely get huge amount of hate, and will fall down like Netflix did if they don't meet the analyst expectations. And that's why I said that I do think that this earnings season could be really volatile. Now, with that being said, let's not stress this video enough. I think you got the idea. This is an important week. Let's see. I think every week until March is an important week. And this whole year, to be honest, is an important year because this defines our strategy. This defines our stock market. And I think after 10 years, we'll be looking back at 2022 or 2020 till 2022. And we'll be thinking, hey, amazing. I held my highest conviction stocks and I'm a millionaire. Anyways, now let's have a look at the charts.
Okay guys, so let's first have a look at the S&P 500 chart. So here we are on the SPDR S&P 500 ETF Trust, which is physically replicating the S&P 500 Index Fund. So it doesn't matter, you can have a look directly at the Index Fund, S&P 500 Index Fund, or at this ETF. You will have the same chart, the same price action to your technical analysis. I'm preferring the SPDR S&P 500 ETF Trust to follow. Anyways, so these three different color lines, what you see are the most significant simple moving averages. So the yellow one defines the 20-day simple moving average, the brown one the 50-day simple moving average, and the green one the 200-day simple moving average. Now, if you have a look from last year, July, we never actually hit this green line, which is the 200-day simple moving average. And this right here, my friends, was a really good bullish run. Now, this bullish run eventually had to end, right? It cannot just make higher highs and higher lows forever. Okay, so we were bound to have a good correction because, like I have mentioned in my previous video, that in long term the fundamentals will drive the liquidity. The fundamentals of the business will drive the market eventually. When people will not have enough money to just pour money into the stock market, like in case of inflation, the businesses which have crazy valuations will drop down, and this is what we are noticing right here. But again, the drop also will end eventually, right? Like for example, the same situation, like higher highs will not be there forever. The same way, the drop will not be there forever. That's the good news. Now, how far it will drop? Well, nobody can really answer that, but we can only make guesses in this case. And for example, right here, if you see this black line, this is the support level from May 2021. And if we just draw the Fibonacci retracement from, let's say from here, the short time Fibonacci retracement, yeah, from the earliest pullback, a good pullback, we can see that now we are hitting a good support level. Okay, and if I delete this and if I look at the same levels, yeah, this is crazy, but still, if we have a look at the same levels from the past, the biggest correction since last year, then we can see that again we are on a support level, and the next support is at 409 or $7. So we can see that yesterday we had a rebound. Yeah, yesterday we had a rebound, but guys, don't get too much optimistic with one day rebound. This is just a single day candle. Okay, like I said, this is not gonna be forever, in the same way like the rally was not gonna be there forever. The same way this downfall is not gonna be there forever. This is the good news. And the other thing is that if you have seen in the past, we always had a V-shaped recovery. So you can see here a V-shaped recovery, a V-shaped recovery, a V-shaped recovery. Okay, this curve is more like you, but what I mean is, I think you understand, the V-shaped recovery. So similarly, if we fall further, we will have a V-shaped recovery eventually, and I do think that we will reach 500 USD dollars like in this years or so, but I can be more than wrong, because the fundamentals of many businesses are getting a good correction. And yes, like we already discussed what happened with Netflix and how the market sentiment is actually being. So with that being said, let's move on to the Nasdaq, and we can see the same pattern what has happened with Nasdaq. So we didn't touch the 200-day simple moving average for a long time. This was a good bullish run, but eventually this had to end as well, and now we have broken the 200 simple moving average, heading to the next support level. And here we can also have a look. So if we just draw from here until the highest peak, we can see that we are again heading towards another support, that is $160. It can go there, and that's the reason, guys, why I'm not pouring money tremendously into the market like crazy. I am saving some money and I am keeping some money aside. I know that this is like people should be investing regularly, but I am a bit skeptic about this market, to be honest, and I am more towards the bears for this market. I agree that many businesses, the tech businesses, had crazy valuations, and this had to get corrected for sure. So that's why I'm also saving some money up for getting keeping some money aside in case of a good decent market correction. Because still, guys, if you have a look at this was 40 to 50% drop, and this is still 10 to 15, nothing compared to this. Yeah, we are still in the same economy. Yeah, we are still in the same economy, at least even worse for now. Yeah, we have to slow down the economy. People won't have money in the coming months to spend because of inflation. And same here, guys, we are okay. This correction seems to be okay in the Nasdaq 1000, but still there is a lot of room for correction for the tech stocks and for the high evaluated stocks. So that's why this is just my strategy. Yeah, this is just my opinion. I am slowly and steadily putting money, but my SIP plans, the savings plan, were, let's say for example, was 2000 euros per month. Now I am just putting 500. Yes, I'm saving 1500 because first of all I want to buy another property, but the most important reason is that I am skeptic about the current market situation, and I do think that the market can fall further. So that's all. Those were the two charts which I wanted to show you guys, and what can happen and to which support levels we should be watching for. And again, don't get panic. This is stock market. Like we saw, the recovery will happen eventually, and a V-shaped recovery like we saw in the past. Yeah, so don't worry, just increase your horizon of investments and keep investing. But in my opinion, my strategy has changed a bit. I have been putting money not into the growth stocks anymore. I have been putting money into more into dividend stocks or value stocks for now, but also have reduced the amount which I'm pouring money into the stock market or crypto market, as a matter of fact.
So that's it, guys. I hope you liked this video, and if you did, then don't forget to hit that like and subscribe button, and I will see you in the next one. Until then, stay safe, stay happy, and ciao.